Hello, today is April 9th, 2022. We always do our disclaimer first, go over our calls, then we make some predictions. This is my trading plan for Monday, April 11th. I should say I'm busy in the morning and I'm not going to make any trades until the afternoon if I do anything at all. But this is the plan I would have if I weren't busy. And it's a plan. I can change it, and I can also be completely wrong. So any trades one makes should be at one's own risk. We looked for the pattern with the early high on Friday, and this is it. And next Monday, we expect the early high. Looking for lower prices, we had a target of 44.65.11. We did get the lower prices, but that target did not print, so we have to add it to the list. So last week we had two targets which didn't print, and that makes the new target from Friday's trade, 45.14.27, not really a lock. In fact, it might fail. About once or twice every year, I get a cluster of failed targets in a very short period of time, and these numbers all print at some point. At least they have in the past 20 years, but they don't always print when I'd like them to. So when I get a cluster like this, I have to take the target generated with a grain of salt. I do believe these numbers will all print. So regardless of how much of a move we get from here, I think we'll eventually see all these numbers. During the day, we got an ultimate buy signal pretty close to the low. That certainly worked. MEJT says now this drop isn't the real thing. Target's 45.14.27. And the rules say that unless we gap down smartly, that's favored to print. But again, if this is one of those once or twice a year cluster of failed targets, we have to take it with a grain of salt. Well, this is the long-term count. We think we've completed years ago green A. We think we've completed green B, and we now haven't decided if we've completed green C. This could be A, B, and C, with C completing green C, and then we're off to the races. My present thinking, which can change, is that this is an A, B, C, and that's B, and there's one more leg down, and I'd like us to hit one of these prices. Now, if this is A, and then you have A, B, C for B, you'd like to complete wave gray capital C down. Now, this week was a price a number of different systems called for a possible low. You can connect these highs, draw a parallel channel from this high. You'll see we hit it right on the nose. If that's the end of gray C, which just doesn't look very aesthetic to me, at least it has a Fibonacci relationship with gray A. That's 78.6. But it just doesn't look aesthetic to me, particularly when the rally we've had. Let's look at these parallel channels. You can see how we stopped right at a 38.2% retracement. This is 61.8 and that's 31.2. Normally a bounce is going to hit 61.8, but if it only stops at, at 61.8, but if it stops at 38.2, it's a sign of weakness. Now at this point, we don't know if it stopped here, but so far it stopped here, and if it doesn't clear this, it's a sign of more weakness to come. And when it stops at 38.2 instead of 61.8, it usually leads to extreme weakness. Let's focus in on the trade since last month's late high. we stopped right at a 38.2% retrace. If you look at these blue graphs, we stopped right at a 38.2% retrace. And if you look at the drop from here, we stopped right at a 50% retrace. You can draw a Fibonacci grid, and you'll see the hits at 23.6, at 61.8, the 50, and this low here is right at the 78.6. So you could say we're at fib support. So maybe it'll hold. But I think this is more significant to me, but that doesn't mean I'm right. Now here's a stilt, and here's a stilt, and here's a diamond. Because of the gap, you can count the origin of the left stilt as starting from here or here. Either one works. And the rule is the first challenge of the origin of the left stilt, and this is one of two possible numbers you could pick for the origin. The first challenge of the left stilt, and if it hits it twice close together, that's still the first challenge. The first challenge almost always holds. So almost always you're going to hold this level and continue down. But the second challenge, if it happens, usually breaks through in grand style. So the majority of times, the diamond inverted, a diamond on stilts pattern says we're going to keep dropping. But if instead we break through this area with authority, usually it'll take us much higher. Right now we have strong resistance at that area from these Fibonacci numbers, from the diamond on stilts inverted, and from the 38.2% retrace I showed you on the parallel channel from the previous chart. A 38.2% retrace, if it holds, is a sign of weakness. And if you break through resistance, that's a sign of strength. These are my calls for next week's patterns. There's no market trading on Friday. Monday's pattern has the early high. We could gap down. Typically, it's a rally day with a final hour high. Failure is a straight line drop. There's a higher MEJT target. Unless we gap down smartly, the rules call for it to print. We had two failed targets last week. That increases the chances for failure here. About once or twice a year, I get a cluster of failed targets. The numbers print eventually, but they don't always print promptly. There's significant resistance to yesterday's high. So long as this holds, and I'm not saying it will, but so long as it holds, I expect weakness in the market to continue. Breaking significantly through that high would change the picture and call for a strong rally. The decline since the recent high have been impulsive. The rallies corrective three-wave structures. Therefore, the odds favor continuing lower, not necessarily in a straight line, not necessarily Monday. But if we rally instead, the advance should be strong, as if you break through resistance, usually you break through in grand style. This just doesn't look like a complete ABC to me. ABC just doesn't look complete to me. We could still have AB with C completing here. This just isn't breaking higher with the kind of authority I would expect if the bull were going to continue. But again, that doesn't make me right. It doesn't break any rules. So we have a higher target. We also have a lower target which hasn't printed. Usually it's a rally day, but if it fails, it's a straight line drop. For me, we're stopping right at resistance, and as long as resistance holds, which we don't know if it will or not at this time, as long as resistance holds, I think we'll see lower prices. You break through resistance, like if we gap up over here Monday, if that happens, you've broken through resistance. I'd expect to go much higher, but I think I have nothing saying that's going to happen. So we have the pattern Monday with the early high, and that's today's call.